weekly Market Watch. I am Yin, business development dealer at Phillip Futures. For this episode of Market Watch, I'll be discussing on gold performance for the second half of 2015, accompanied with some of the technical analysis. So why do people trade gold? Gold is a safe haven product that investors tend to hold to whenever there is geopolitical conflict. Dollar weakness usually benefits gold as it boosts the metal's appeal as an alternative asset and make dollar-priced commodities cheaper for the holders of other currencies. So how has the precious metal performed for the 2015 and what are the key events to look out for? The precious metal has been in a slant for the past 2015 half year as it hit the 5-year low of 1057 just last week. It has traded the lowest as the investor prepared for the possibility that Federal Reserve will increase the US interest rates next month, reducing the metal's appeal as a store of value. However, gold has some hope for recovery as China is planning to internationalize its currency renminbi. The International Monetary Fund is set to decide whether to include the yuan in the basket that make up its pseudo-currency called special drawing rights. Inclusion seems likely, which yuan bulls hope will lend support to the currency. However, the fundamental might not be strong enough to stimulate more buying for the precious metal, as the demand will be limited due to the speculation on the Federal Reserve. Geopolitical unrest can also spur the precious metal demand. Gold climbed on rising political tensions after Turkey said that it has drowned the Russian fighter jet, spurring demand for haven assets. The rally was further supported as the investors scurried into the safe haven metals after the Paris attack. However, the rally doesn't last long as the precious metal pared gains as the investors' focus returned to expectations for the US Federal Reserve to raise the interest rates in December. So what is the focus for gold? Gold demand is spurred whenever there is a heightened speculations of political conflicts around the world. The Paris attack and the Turkey shooting down the Russian jet has caused the investors to turn back to hold the safe haven metal, as the metal is considered as a safe haven asset and seen as an effective way to hedge the risk. FOMC meeting next month has triggered the unrest in the investors as most speculate that the rate hike will most likely take place. Strengthening dollar usually pull down the gold demand as the precious metal is perceived as an alternative asset. Moving on with the technical analysis for gold, gold has been in bearish trend for the past 5 years and hit the lowest in November. From the 5-year gold spot daily chart, we can see that the metal has been trading below 1,200 for the most of the 2015. The price has dropped 18% from the first half of 2015 and currently trading around 1,060. In a short-term view, this downtrend is expected to continue as the investors are concerned on the possible rate hike happening on 15 and 16 of December. For the time being, gold is expected to be supported at 1,030 and the immediate resistance at 1,120. To conclude, I believe the precious metal will still be bearish for the year of 2015. Even though the fundamentals of gold going bullish are present, these good times will not last long, as the rally will crumble on the Federal Reserve plan for raising interest rates. Now with the Fed ready to start raising the interest rate, markets will be sensitive to any comments from the Federal Reserve and the geopolitical unrest are not able to lift up the demands for the precious metal. With this, we have come to the end of this week's market edition of Market Watch, where we have discussed on gold. For more information on the risks and returns of investing in gold, you may approach any representative from Phillip Futures for a further discussion. Please subscribe to us on Phillip Capital YouTube channel and Facebook. Stay tuned for more Market Watch videos. Thank you.